Welcome people online. So hello and welcome everybody to the Texas REIAs. The Texas REIAs is the largest network of real estate investor associations and real estate investors in the great state of Texas. Over 150,000 members, participants, and attendees going back to 2003. We do all kinds of things like live meetings, market updates, training, and more. We have 257 vendors, 1,000 private money lenders, 25,000 buyers, et cetera. And one of the things we provide to Texas real estate investors is market data. And I'm going to tell you a little bit about the market right now. So this is the Texas Roundup, and this is what's going on in Texas. The average price house in the great state of Texas, and I'll show you Dallas in a minute, but the average price house in Texas is $425,000, up 1% over a year ago. Basically, it's flat. Median house price in Texas, $335,000, down 1%, basically completely flat. But if you really wanted to look at just one number that tells you more than any other number what's going on, it would be this number right here, months of inventory. That's kind of the barometer of the marketplace, months of inventory. What is months of inventory? The way that's calculated is as follows. If you took all the houses in the MLS for sale, took them all, and you stopped putting any more for sale, you stopped adding any more. So you said, we're just going to sell the houses that are for sale. We're not going to add any more. We're not going to let anybody else put a house on the market. The question is, how long would they last? How long before the shelves are empty, before you sell them all? And the answer is 5.6 months. Now, let's put that into perspective. They say if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. So let me ask you guys a question. What kind of a market are we in? A seller's market or a buyer's market? Technically, it's a seller's market. Now, perspective. A year ago, we had 4.8 months of inventory. That was a pretty good seller's market. Now it's a very weak seller's market, but we never got to a buyer's market. Why not? Well, let's look at the history. 2021, prices in Texas went up 18% in 1 year. 2022, they went up 10.7% in 1 year. 2023, flat. 2024, flat, except at the end of the year, it went up a little bit. Why did it go up a little bit? What happened to interest rates at the end of 2024? They went down a little bit and prices went up a little bit, but not much. So I'm going to show you what's driving this and what's going on. But in general, here's what I need to tell you. Real estate doesn't care about interest rates. Real estate doesn't care about the economy. Real estate cares about two things, supply and demand. So certainly a big story is what? Interest rates. They went up. And when interest rates go up, right, mortgages are more expensive, right? Houses are less affordable. The payments are less affordable. And then fewer people can afford them. So the demand goes down. So yes, when interest rates go up, the demand goes down. When the demand goes down, that's downward pressure on price. So then why didn't prices go way down? Why did they stay flat? Well, remember, supply and demand. So we know how interest rates affect demand, but let's talk about supply. Historically, typically, 2/3 of the properties for sale in the MLS are resale and 1/3 are new construction. Right now it's inverted. Why is it inverted? How come people are not selling their houses? Anybody want to guess? Yeah, the economy is pretty good. People have jobs for the most part. The problem is everybody got one of those 3% mortgage and they don't want to give it up. Right now, people should be saying, honey, let's get a bigger, nicer house. But right now, instead, they're saying, honey, let's stay put. Why? Because they got a 3% mortgage and they don't want to give it up for a 6% mortgage. So all that supply is being held off the market. Well, if you don't have enough supply, what does that do to prices? pushes prices up. So we have things pushing down, we got other things pushing up. We have other things pushing up. I don't know if you know this, but right now we are in the middle of a housing shortage. Who's heard of this? We have 6 million fewer houses. Then we have people that need a house to live in. And when there's not enough supply, what does that do to prices? Pushes prices up. We have another big problem or big opportunity, depending on how you look at it, here in Texas. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? Pretty obvious. And there's another 10 or 12 million people, we don't know where they went, but there are a bunch of them here too. And they all need a place to live. And there's not enough houses and there's not enough apartment buildings. So when you don't have enough houses or enough apartments, then where do they go? What does that mean? It means the demand is going up, but not matched with the supply. What does that do to prices? So we have things pushing prices down. We got other things pushing prices up. And when all of those things counteract with each other, the market is flat. The market is flat. Dallas is the second most expensive market in Texas after Austin. Average price house, $505. It is flat from 1 year ago. Median price, $392.5, down 2%, which is basically flat. 4.6 months of inventory. Dallas is actually the hottest market in Texas, believe it or not, with 4.6 months of inventory. The history, 2021 up 20%, 2022 up 15%, 2023 flat, 2024 flat. So where's it going? What are the drivers? Let's talk about some of the drivers and I'll give you a forecast. The economy. The economy doesn't affect real estate as much as people think. During the Great Depression, real estate prices went down a whopping 6%. Nothing. During the Great Pandemic, another 1 in a 100-year event, real estate prices went up 30%. Right? It's not the economy. It's the secondary things. But let's look at economy and real estate. Yellow means flat, green means up, red means down. Confidence, consumer confidence is flat. Unemployment's good. We have full employment. Job growth is okay. Stock market's doing pretty well. Now, the stock market doesn't affect real estate directly, except for when people feel like they have more money in their 401k, when they feel richer, they're more likely to buy real estate. So that pushes the demand a little bit, which pushes the prices up a little bit. Growth cycle in Texas is great. What else? Affordability. Interest rates. Interest rates for sure are higher than they used to be, so that's pushing prices down. House price trajectory is flat. It's not up, it's not down. It's just flat. Housing supply. Active listings flat, months of inventory right in the middle. Right, 5.8, right between buyer and seller. Housing permits trajectory. We have a problem. We're not building enough houses. We have a housing shortage. That's pushing prices up. We also have a construction problem. We have a labor problem, right? General contractors are getting older and they're dying and they're not getting replaced. The average general contractor is 58 years old. So I have some advice for you. If you have a kid in high school, don't send them to college. Buy them a hammer. Yeah, seriously. I know some plumbers that are making 7 figures. I know plumbers that didn't go to college that are making $1 million a year. You go to college, you can study something that's maybe not the most interesting thing. You can pick up a lot of student debt. You can go get a job working for an idiot for $60,000 a year, or you can pick up a hammer and make $1 million a year. Right? And just saying, take vacation whenever you want, not work for anybody. So I went to college. My parents went to college. And now I have a 16-year-old boy. I could care less if he goes to college. If he wants to go to college, I'll send him, but it's not a requirement anymore. Housing demand, closed sale trajectory flat, pending sales trajectory flat, but this is really the biggest bullet in the whole screen, migration. Migration is the ratio of people moving in versus people moving out. And in Texas, we have a huge influx of people. They all need a place to live, a house or apartment. They all need a place to live. And we're not building enough houses, so that's pushing prices up, pushing pressure up. So I'll give you a forecast. And by the way, all of this data is not from me. It's all from the Texas A&M School of Real Estate and a number of online resources. We just report the data here at the Texas REIAs. And by the way, we don't have some agenda. I'm going to tell you, most people that report data have an agenda. Like the National Board of Realtors, every year they tell us the market's going to go up. You know, they always say, oh, it's going to go up for this reason. No, it's going to go up for that reason. They're always trying to convince everybody it's going up. When the market's going up, we're going to tell you the market's going up. When the market's going down, we're going to tell you the market's going down. When the market's sideways, we're going to tell you the market is sideways, because we have strategies, plenty of ways to make plenty of money, up markets, down markets, and sideways markets. Sometimes it's easy to buy and hard to sell. Sometimes it's easy to sell and hard to buy. It's never easy to buy and easy to sell. So what is the forecast? Well, if you were looking for some market crash or from something that looks like an exciting market bottom, that probably was it, and there wasn't much to it. Interest rates will probably decrease a little bit. They just did a little bit last week, and they're probably going to drop another 0.5% between now and the rest of the year. That will improve the interest situation a little bit, which will give the market a little bit of a boost, but honestly, not much. So our forecast is we're going to be flat. Prices may be up or down 1%. There's just not any big thing that's going to affect the supply or demand big enough to drive the market either way. It's a great time to be a real estate investor. What I love about the market we're in right now is it's not that hard to buy and it's not that hard to sell, right? We're right in the middle. Which strategies work right now? And the answer is yes. So that was our market update. I hope you guys enjoy that. You guys learn a lot? You guys like that? Yes? Thank you. All right. Any questions on that? Any questions about anything we talked about so far? Go ahead.
I think the most developed areas are going to be in the next years?
The Texas Triangle. Look where the people are going. You want to buy and hold where the population is growing. And it's really easy. The government knows those numbers. Look in the Texas Triangle. Austin, Dallas, Houston. That's the triangle. That's where everybody's going. Right? You can actually see maps of the whole state of Texas. There are some counties in Texas that are actually losing population. The triangle is exploding. Right? Yeah. More questions? Yeah. Especially the major cities. I'm going to tell you, for rental properties, I only want to own rental properties in the major cities. I don't want to own rental properties in the rural areas, but I will flip properties wherever there's low inventory, wherever the people are going to. Absolutely. Yeah. Question?
As a beginner investor, do you recommend owning us an LLC before we can avail of your funding?
You know, do I recommend getting an LLC? You know, here's what I'm going to tell you, and I'm going to give you an answer that's a little different than most people will say. Believe it or not, it is perfectly legal to own real estate in your own name. And the vast majority of people that own real estate just have a house under their name. Believe it or not, lawsuits are not as common as people think. Believe it or not, insurance takes care of anything that might happen. And even if you have an LLC, if somebody sues the LLC and the LLC, loses, which is not likely, but it could happen, they can generally get through the LLC anyway. So having an LLC is not as big a deal as they said. So here's my advice. Set up an LLC. Make it as simple as possible, like single member LLC or you and your spouse LLC. It's $325. Don't go crazy. What I don't want you to do is this. I don't want you to ask an attorney or a CPA, do I need an LLC to invest in real estate? Because if you ask that question, they're going to say, oh, yeah, that's really important. You could lose everything if you don't have an LLC and entity. And then they're going to ask you all these questions. How do you expect to make money? Well, I think I'm going to do this and this and this. Oh, okay, you need a C Corp, you need a Series LLC, you need an S Corp, blah, 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 blah. Before you know it, you'll have spent $10,000 building this mountain of entities, right? So you've built the perfect business that's never made any money or even done anything that's made any money. And then you're going to start doing it. And when you start to actually make money, you're going to discover you thought it was going to look like this, but it really looks more like this. So you spend a bunch of money creating a bunch of entities that are not even exactly what you need. So keep it as simple as possible when you're getting started. I don't want you to spend time on LLCs. I want you to spend time on your education. I want you to spend time finding, flipping, buying, holding real estate. Okay. Yeah. Any other questions? Yeah.
How about for rental properties like 6? I know this is like a very.
Yeah. I own a lot of rental properties. So now they have this Series LLC, which they didn't have when I got started. But I'll tell you this, every time you, so some people would say, if you want the ultimate protection, you put every single rental property in its own LLC. And it's too much work. You're exactly correct, because every time you open an LLC, another tax return, another franchise tax statement, another bank account, another set of books, it's such a pain in the butt to do all the paperwork associated with just managing an LLC. So what I've discovered is I ask myself the question, how many baskets do I want my eggs in? I don't want all my eggs in one basket, but I don't want my eggs in 50 baskets. So I tend to keep putting more and more properties in each LLC until I'm like, I don't really want to add any more to that. Let's add another one, right? So it's kind of a pragmatic halfway in between answer, okay? Yeah. Question? Yeah, go ahead.
But
Yes, what about it?
taking like on commercial,
What's like where, is that what you're talking about, or the supply and demand? So here's what I'm going to say about commercial real estate. Commercial real estate, and I'm going to give a little update on that in a minute. Commercial real estate follows interest rates much more directly. And because the value of commercial real estate is not a function of comparables, it's a function of how much money it makes, and it's cap rate. And I'm going to give you the formula in a few minutes, but commercial real estate values go up and down. When interest rates fall, cap rates fall, and commercial real estate goes up. When interest rates go up, cap rates go up, and commercial values go down. Okay, so they follow the interest rate pretty directly, right? So 5 years ago is a great time to get into commercial because interest rates are going down. 2 years ago is a terrible time to get into commercial because interest rates were going up. So it follows the interest rates much more. But you also, like all real estate, want to go where the people are going. You want to go where the population's growing. Yeah, because that's where you're going to have the demand. Okay. Other questions?